Welcome to Bears in Exile. Today is April 26th, and we're going to look at the Dow Jones, the SPX, the VIX, and TNA. So today had a very nice big green bar. Actually, it was a bit of a surprise, a very nice surprise to me. I would have thought that the movement would have been more muted, waiting for the Fed's meeting, but the market does what the market wants to do. There's a little bit of a warning sign or a caution on the Dow. You can see we do have a little bit of excessive separation on this bar today. Notice that while it is uniform, the two fastest moving averages are might be getting a little bit ahead of themselves. Whether or not that means it needs to tick down just a little bit on the top to correct it, or if it's going to move sideways at some point to correct itself through time, remains to be seen. Also, we are right at the very top of the Bollinger Band, which is also something to think about. It's not drastically over it, and it can go a few days outside of the top Bollinger Band. So long-term moving averages massively strong, short-term moving averages massively strong. Looks extremely good on the Dow. And on the 60-minute, you can see a little bit of that bubble or excessive separation I was talking about. And on the 60, we can already see that it's starting to move sideways to correct for it. 60-minute looks fantastic. 30-minute looks fantastic. And the 15-minute is showing a little bit of a partial flatline. I'm assuming because of the Fed's meeting tomorrow. All kinds of earnings tomorrow, and Ben Bernanke speaks, all that wonderful stuff. Tomorrow's going to be a huge day. SPX, same thing as the Dow, possibly excessive separation, and at the top of the Bollinger Band. 60-minute, same thing, moved up, had a little bit too much, and moving to the side to correct. 30-minute, same as the Dow, overall massively strong, and the 15-minute, a partial flat line. Notice also that the partial flat line is not resting on top of the long-term moving averages. That is good. That's gives it a little bit of a buffer in case it does need to come down and kiss it. But looks very nice. And the VIX had a green bar today as well. The price is down since yesterday's candlestick, but it was a green nonetheless. Kind of interesting since the Dow and the SPX were both green. And you'll notice that thanks to the candle yesterday, we did have a tick up on the shortest term moving average, signaling that we needed some kind of a possibly corrective move to fix this little separation here, but we didn't get that at all. Really, it was lower today. Notice long-term moving averages are bearish. And we'll see more of that on the 60-minute. There's that little corrective blip uptick that we saw on the daily. It manifested itself on the 60-minute inside of the long-term bar, and it popped right back out of it, going up for another test. I would say that this looks a little bit of a mess. We do not have separation of the shortest term moving averages on the 60-minute time period, trying to go back up for a test. That looks pretty weak to me. And on the 30-minute, we see more of that. The long-term moving averages we have compression, but we do not have a flat line or a flip. So the bears on the VIX still have the upper hand, definitely. And on the 15-minute, we do have almost a perfect double flat line. The shortest term moving average is bobbing all over the place, and tomorrow will be the decider. TNA I mentioned was stronger than the SPX and the Dow, and sure enough, this chart looks wonderful. We have even better separation on the shortest term moving averages than the Dow and the S&P. Everything is pointed up, and there's some separation on the fastest two moving averages on the shortest term, but we also have better separation of the longer short-term moving averages. So I would say that there's less need for this to do any kind of fixing itself or anything. This chart looks just absolutely fantastic. TNA was and continues to be a winner. And on the 60-minute, it did get ahead of itself today at some point in the early goings of the day. We noticed we had the down tick, which told us that there was a down move coming, and it has already completed that entire move. It already moved through the entire range of the short-term moving averages and is now moving sideways. But everything is, the long-term moving averages are pointed up still, short-term moving averages are sideways, but it's unfortunate that actually the shortest-term moving averages are pointed sideways instead of up. So it's very good that this little bubble has already fixed itself, but this needs to re-expand. And we have a flat line on the 30-minute. Long-term moving averages still look great. And on the 15-minute, it actually has already gone into the bar and is starting to weaken it. Well, I still say that the bulls definitely have this one fairly confidently in their pocket, unless something really bad happens tomorrow. This daily is just absolutely beautiful, and I think that if this goes up and breaks out to a new high, well, if that happens, we're already going to be at a new high on the S&P and the Dow, so the likelihood for this to go up and do exactly the same thing and run is pretty good. I should have mentioned that earlier on the SPX. SPX today did break to a new high. Massively bullish, and that is absolutely gorgeous. Multi-year highs, barring something bad happening tomorrow. The bears should be really freaking out right about now. So there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and time consumption purposes only. And I'll be waiting for tomorrow. Good luck, everybody.